Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to elaborate on some of the ideas that we had shared off of the free video we did last night, because in these free videos I like, sometimes we'll review stuff that has already happened, sometimes we will review ideas that you can put to work the next trading day. I do want to provide actionable trade alerts for you. So with the idea of Google and heading into earnings, we looked at that butterfly, talking about placing it around either 1,000 or at the 10-10 strike and using that through puts, trying to make it a little bit wider if at all possible. Okay, then the report comes out and they've had just an amazing quarter. These were the numbers that I was looking at, which really blew away what I guess most people were looking at, and despite such a solid beat on the report, we're only trading up about $30, which is right within the expected move. So the idea that we were looking at, and just what you have to consider for yourself if you did take any of those trades, is just that you're trying to work the idea that generally speaking the $1,000 puts will stay out of the money, and this will be the contracts that expire worthless. Then, whether or not you make a good profit or how you should think about managing it tomorrow, all comes back down to which strike you purchased on the upper end of your butterfly. If you did it $40 wide through something like a spread like this, well then I think you're going to be in great shape, because you probably paid close to $10 to $12 for it, and then if you open up in this area, then your 1040 put will have $20 of intrinsic value. These will begin to gain pretty quickly, and you'll have a nice profitable trade on. If Google starts to lose a little bit of its early morning momentum, and that's kind of what I'm looking for the spread that I put on as well, but take that opening 15-minute range. If we can close below it and you start drifting a little bit lower, just remember that you want it to get as close to that put strike as you can without going under it. And that will be the point that you can come in and maximize that butterfly. For what I actually ended up putting on with the trade, my risk profile graph ended up looking a little bit more like this, where if we did have an unexpected move to the downside, we actually would have still been able to make money right to the bearish expected move. A neutral open or a pin right there from 1,000 down into 995 is a great spot to be as well, and no matter what they did to the upside, we would make money in that direction as well. So everything we looked at in Google has worked out pretty well. Always nice to look at a little bit of a before and after, and I hope you find this helpful as you get ready to set up your next earnings trades. You guys have a great night, and we'll see you at the next free video.